Welcome back to the next episode of Baltimore Real Estate Full Circle, where we talk about how the market's doing, but really primarily how it affects local investors or people that are looking to invest with investors. And I'm very happy to have Alex with me today. And before saying anything, I would love for you to share. Alex, who are you?
First off, thank you for having me today. It's a pleasure to be here. I really appreciate you guys and your podcast. I'm Alex Aaron with Blank Slate. We are a local development and construction firm headquartered in Baltimore City. And over the years, we really focus on showing up as a neighbor and as a partner, tackling a lot of vacant properties throughout the city.
How did you get into, take me all the way back. Where are you from initially?
Originally from Northern Virginia. So Fairfax County, cross the bridge.
Competition.
Yeah. But by way of background, I actually have a finance background. Studied finance at Howard University in Washington, D.C. Left there and had the opportunity to work in finance in New York on Wall Street. So I did that for part of my career. And then left New York, went overseas for a little bit, and I came back to the States in 2015 and started a company with two buddies. And really, when we got started, we were flippers. Like everybody else, we were buying single family houses from the city, from auction, fixing it up, selling them, promoting home ownership. And eventually, my partners went on to do other things. And I could be and founded Blank Slate. And we started doing blocks, and we started doing buildings, and really focused on mainly multifamily and mixed-use assets. It's just been a great kind of growth trajectory. I've enjoyed it. I love the different architecture and the, vacant and historic buildings and unique things that we can do. So it's been a great ride.
So when you went out of the country, if you don't mind me asking, where did you go for those couple of years right there?
It's an interesting story. So my dad is Nigerian, my mom's American, and I had been to Nigeria several times. But I took an assignment over there in Nigeria. After university, there's a program called NYSC, National Youth Service Corps. It's kind of like a Teach for America or AmeriCorps in the U.S., whereby, postgraduate, and you do like an internship, if you will, for a year. And you could be in any sector. You could be a teacher, you could be in agriculture, you could get the SEC, just wherever. And I had the opportunity and privilege to work for one of the then sitting governors as the U.S. liaison. So overseeing like his T&E budget and all his stuff in the U.S. So conferences, hotels, cars, all that. I got that facilitating coordinating. It was a pretty cool experience.
That's amazing. You know what's interesting? I was at an event in New Jersey recently, and I don't know if you know the group. The guy's name I think is Tiffany. We did a podcast with him, and so very great guys. They also went to school, I think, in DC as well, and one of them is a doctor. One of their partners that buys multifamily with them, I believe he's the CFO.
Okay.
And what he did is that after a few years of doing real estate locally, he went back to Nigeria.
Right.
And now he's working there as a doctor while also being the CFO of a company because he's able to make money in the U.S. real estate market with his partners. And then at the same time, he's also being able to give back. And he told me, obviously, working in Nigeria, I'm not really making much money as a doctor. But I'm able to give back after moving to the U.S. and building the wealth that I did, and passive income that I created. So now I'm able to give back to my community. So it's interesting because it's the second time this week where I heard someone say, yeah, I went back to help out a bit. I did a little bit of that for like 2 weeks in Ukraine before the war started, going back 2017 or something, to kind of just see how, in some cases, what they call third world, but just like slightly different. Exactly. Like you go to a market and there's like just everything going on. The rest of the year you go to the grocery store.
It's funny you say that because, again, I'm not from Baltimore. A lot of people think I'm from there or, I've been there for a while. And I will tell you, I consider myself a travel a lot. I like to travel, but I think I have thick skin. But I think having that experience overseas, it's a different dynamic, right? The tenacity, the fast pace, but having that overseas experience, I think, helped shape my perspective when I came to Baltimore. And you do your research, a lot of people who are not from Baltimore, sometimes they come and they go. They get frustrated with the system and, how to navigate, working with the city, working with community, the red tape, whatever you want to call it. But I think it was my experience in Nigeria and also my experience at Howard University that, taught me how to be a little tough and not give up so easily and not accept no. We're pushers like you. You're always, that's man, you got this deal, you're following up, you're great at following up. So some of those soft skills I think I got while I was overseas, I brought that with me as I pursue this career and develop.
Correct, because that's really looping into why choose Baltimore. You're from Northern Virginia. You went to New York. Why did you come to Baltimore?
That's a good question. I get that a lot. I consider myself one who takes risk, but I like to take calculated risk, not blind risk. And what I mean by that is when I was assessing the markets, I looked from Boston down to Virginia. Oh,
Wow.
and what I noticed was Baltimore was one of the last emerging markets on the East Coast. So to a certain extent, New York was done, Jersey was done, DC was done, Philly was done, you name it, but Baltimore still had a lot of opportunity. And specifically, having lived in DC and New York, I was adamant about truly practicing development of displacement. In other cities, you're buying over inventory, most of it's done. So now you're having to maybe buy people out, push people out. In Baltimore, there was enough vacant property. At that time, I believe it was like 16,000. We're down to about 11,000 and change vacants. But at the time, it was about 16,000 vacant units. So I knew I could enter this market. I could make a difference. Entry levels low. And I didn't have to displace anyone. Everybody stayed in these communities that I worked in, the legacy residents. I can focus on the vacants and blight and bring people to the community versus pushing people out. So I fell in love with the opportunity. I definitely fell in love with the architecture. Oh, I love the different styles. Kind of remind me of Brooklyn, and we were talking earlier. The brass sounds. I fell in love with their people. They're very authentic people. And it's a foodie city. We got great people, we got great food, we got great artists. So if you step back and think about it, like Baltimore is an incredible city. And to me, it was just a hidden gem.
What's your most underrated neighborhood of the city?
Ooh, don't do that.
Why can't not the most? Give me, just throw out one.
Underrated neighborhood. Woo! Man, there's so many. We are a city of neighborhoods.
That's why I didn't have zip code, because we all know zip codes here. You got Res Hill right next to Macoma, and those are two different worlds.
Yeah. I will tell you, I would have to say like the Penn North and Auchentrolley and Parkview area. Then I say that near the zoo. Good. I say that because it is near the zoo, it's near Drury Hill Park. Those are a maze. I mean, if you're on Auchentrolley and you live across from the conservatory, come on, right? You had that big park, and I think people take it for granted. I don't think as many people go inside that park. Just the other day, I went to a fundraiser for Senator Hayes. He had it in the park, and I was just riding through. It's like, oh, it's incredible. I mean, in the wintertime, my kids, you take them through for the Christmas lights. In the summertime, I'm there at AFRAM. I participate in the Caribbean Festival. So I try to take advantage of all the opportunity and events. It's an incredible space. So I think, people know about Reservoir Hill and other communities, but if you kind of go west and, on the other side of the park, there's incredible assets on there.
Correct. And I think that getting into starting with dealing with Baltimore, you said that you initially were doing like single flips to homeowners. And this is I'm going to guess you said, 2015?
Yeah, we got started in Baltimore 2015. So 11 years.
It's one of the early birds before really exploded in 2020, where everyone was doing the Baltimore flips. Back then, so like you were doing that for how many years? Just the flips, like the single families?
We did it for a good 4, almost 5 years, and we started bumping up to multifamily.
So what brought you from because the single family flips essentially flip to homeowners. What made you decide, hey, I want to start either full blocks or even just multifamily?
Good question. So on the multifamily piece, it just kind of was happenstance. I purchased our first multifamily. It was a small building. It was 3-dwelling, 1815 Park Avenue. That was the first one I bought. And that was college, I don't know, August, September of 2019. Then COVID happened. And my crazy self would buy like an office building. So it was 1758 Park Avenue, which is now our headquarters, where the murals are at on the side of the building. So I bought 1815 Park in that August, September. And I had always wanted to buy a building where you have like the glass at the front and first floor commercial, maybe some apartments. But a lot of those, they don't come up as often. So that quarter one came available, and I bought that one and redesigned it where our Blank Slate office was in the first floor. We had 2 apartments above. So really, again, I got into it just by, happy chance. It came, the unit came available, and we started with 1815, and we bought 1758. And they were smaller deals, 3 units. That was our first taste. And then from there, it just kind of grew to, what if we could design, multi-family environments, it has amenity space, the rooftop space or whatever. So then it kind of went on from there. And then on the block side, it's just a natural progression, right? Like you do the onesie twosies, and then eventually maybe you scale up. You might hire new folk, right? Like a construction super or a private manager. It's different costs now. So now you can't maybe do a onesie twosie, and you do need to do a block so that you cover your overhead, still be profitable. And I enjoy doing locks. I mean, again, it's hard to find locks, or continuous scatter site usually. So if I come across in the area and there's 7, 8, 9, 10 vacants, why not? I go have that conversation. City, they're instrumental, being a strategic partner, can help you get it. But that's how we approached it for any block that we've done.
Right. And then the challenge with the blocks is that what I've noticed is you'll have, let's say, South Payson, West Baltimore Street. Well, you'll find easily blocks. So the problem becomes that the ARV on those properties are less than the cost to build them. So there's no value add there. You need to find properties on Park Heights in a certain, like that area, or in some other location where if you get a block, there really is value there,
Yeah. Or you look at it from a different lens like we have. Instead of saying, it doesn't pencil, or we can't do that, because there is a gap. You're looking at it from a debt equity play. Our cap stack includes one more line item, subsidy. So we do pursue debt, we do raise equity, and then subsidy. Both the state of Maryland and the city of Baltimore have a number of programs out there to help developers and investors and provide incentives so that they can go into these communities that are often forgotten, have a high rate of vacancy, and understand that the numbers don't work per se. So when we look at that, the thing that I hope people spend time and realize is there are existing programs out there. You just have to know about them. You have to know how to apply for them. Oftentimes, you have to partner with a nonprofit entity. A for-profit developer can let go for the subsidy. But you get a strategic partner, you get a nonprofit, and then you add that as a layer to the cap stack so that you can go in still, earn some profit.
Right. Similar to, I think, Rebuild Baltimore did off Oliver with N Street. Yeah. Beautiful what they did there. I think they're selling it to teachers, and I arrived at the property when they had a ULI, did a walkthrough there. And so when we walked it was very interesting to see, to your point, the last part of the capital stack, which is the subsidy, to understand how the numbers really make sense. Because otherwise, as a pure investor, and this is something we're going to talk about more in a bit, but like looking at the market, even going from single family to multifamily, the equity, at least at the time, to me, it seemed that the equity was in the single family flipping space, or even the buy, hold, and refinance, which obviously that changed a lot. On the multifamily front, your equity seemed to be a lot more limited. Did you run into those type of challenges in the multifamily where you saw maybe your equity wasn't as much?
Well, we're Blank Slate, we're long-term, right? We're not overnight. So we're not short-term. We don't buy multifamily, fix and sell assets like some people do. We buy, fix and hold. So whereby some people might be looking for an immediate return, we're looking 7, 10, even 15 years out. So you'll make some margin on your rent roll, right? But really where you get value is you continue maybe to buy other properties, or other people are buying other properties, and then the area improves, and then you get that appreciation. So on the multifamily, we are cash flow positive. We beat our rates, obviously, otherwise they couldn't get the debt. But the real juice comes from, years down the line, not in the immediate future.
And are you still doing your one-off flips, or are you primarily doing developments in multifamily right now?
We don't do one-off flips, but we will do blocks. So we still do development for home ownership, again, working with the city. So if we get a vacant block, we're happy to rehab that. If we get vacant lots, we can go vertical in your construction. But yeah, we still do a decent amount of rollovers, if you will, to promote home ownership in the city.
Beautiful. And I think really bridging into that, getting into what we see as what we're hearing just as a brokerage on a day-to-day level, we've seen the market really change. And I don't know if it's something that you see as a developer where 5 years ago, there was a lot of buyers and not as much sellers. Now it seemed that the market completely shifted in the view of what we're seeing on a day-to-day, where now there are sellers that are very distressed. They need to sell, and there aren't as many buyers. So there's a complete disconnect, and we're starting to see sellers that are becoming realistic. But now a lot of the investors that invested that didn't underwrite properly, and I think that's the source of a lot of it, are painting Baltimore in this red paintbrush. And it's not just individual investors as someone that's buying a multifamily. I think it's also with the sources of capital, whether it be a limited partner or just your Wall Street investors with like the DSCR market. So getting into that topic, and one of the main reasons I really wanted you on is to share your view on what you're seeing in Baltimore, because a lot of people just paint negative, and it's always easy to chase the negative. What are you seeing with Baltimore that keeps you bullish about it?
Sure. I'm going to look at this camera. Do not paint Baltimore red because of your lack of due diligence. Sorry, not sorry. So Baltimore's an incredible city. I'm going to put on for the city, but I hear that a lot, right? It is very challenging to come from out of state, come to this dynamic city. And it's very easy to get lost in the sauce, right? Because you didn't do your due diligence. It's not a city where you can just come thinking you're going to bring your debt equity and you're going to do all these deals and that's it. It's not, and you have to respect the process. I'm actually glad that we have a lot of advocates on the community side, right? But that's what I was talking about. You got to factor for subsidy. Where we kind of got our start was being an expert in historic renovations. Oftentimes people run from that. I saw that as an opportunity because I read and I understood, Baltimore City has this unique 10-year tax credit if you follow their standards and guidelines. Okay, what's the standards and guidelines? You have to know what it is. Certain window sizes, things you can or can't remove on the interior, cornices on the exterior, certain facade on the rear, right? Brick, hardy, stucco, not your vinyl siding that you might do in the suburbs. So Baltimore can be successful. It will be successful. And from the investment standpoint, I just urge people to do their proper due diligence, or even more so, partner with somebody. There's nothing wrong with entering a market and saying, hey, I'm not as familiar with this market, partnering with a local person, developer, investor, doing 2, 3, 4 deals with them, and then continuing on your own. But I think what happens is people don't understand the lay of the land. They don't know of all the incentives, and then they paint it as this impossible, difficult, challenging market to work in. Any market is challenging, but again, you got to know the lay of the land. Just like if I went to New York, I don't know New York zoning the way I know Baltimore zoning. I don't know all the incentives. I don't have the political connection right there. It would take time. I can get to know that. I can get to know the people. But starting out, if I'm entering a new market, I most likely want to partner with someone and learn from them. And that's what I did, even coming to Baltimore. I was an investor. I wouldn't even call myself a developer. I was an investor. I hired general contractors. I hired realtors. I secured debt from local banks. Like I did all the things and I kind of watched. Like I didn't become a licensed general contractor until 2019. I entered in 2015. But from 15 to 19, I was watching. I showed up for every inspection. I watched the inspectors. I watched the general contractor so that I knew what was the code, what was this. So it was self-taught, but I had to surround myself with people who had done it before, particularly in that market, so that I could learn. Then I took it upon myself to spend 6 months when I came in 2015 just to study. I studied permits. I studied zoning. I studied chat. I did all that so that, again, I wouldn't hopefully lose my shirt early on. It was like, I got to sit back and learn. I met with people. I went to community. I met with council people. But I really had to study the market because I wasn't from here and I didn't know everything at that time. And eventually, we grew. So that's my advice. Just kind of don't be quick to paint something red, do proper due diligence, and when possible, partner with local folk.
Right. And especially because you develop and your goal is developing, I'm intrigued to see, even just economically with everything that's going on, what are your beliefs in Baltimore 5 years from now? Obviously, right now, in general, nationally, everything seems very dull, especially with inflation and rates might go up. And now AI has been inflated on, the stock market. So everyone's going crazy. But just practically speaking, based on the people, what you're seeing on a day to day on the street, what do you think Baltimore is actually going to look like in 5 years from now?
Generally, I'm an optimistic person. So no, I might be the wrong guy to ask because I'm always going to be positive. I'm always going to be optimistic. I will tell you, my uncle taught me this a long time ago. He said, you want to measure a city on their success. Just drive around, look around, and see if you see cranes in the sky, right? That's the first test. Then the second test is it's natural to go downtown to the harbor. You're going to see those cranes, but start going into the communities. When you see folks like Tebow, all right, and Seawall doing what they're doing in Remington, there's cranes in the sky, right? When you see folks like Bramble and MCB coming over to Reservoir Hill, right, and doing incredible park projects, including the Moen office building that they're putting on North Avenue. When you see folks like Chad Williams and the West North Development Authority really tackling blight between the 600 block and the 3600 block of West North Ave, right? So when you start to see folks come out of downtown, out of the harbor, and into what we call the Black Butterfly or into different neighborhoods, that's a good sign, right? So the next 5 years, I hope more people come, right? I hope more people come from Cali and New York and DC. I hope they partner with local folk. But we need that injection of investment. And I think people are starting to realize that it's real. You know, what we often hear is, we've heard that before the last 30 years, the last 50 years. I think what has changed is the leadership. You have a governor that is 10 toes down, not messing around, invested and committed. You have a mayor that took the time during his first term to get things right, from a community standpoint, from a safety standpoint, even some infrastructure. And now in the second term, he's all like, let's talk economic development. Let's get businesses here. Let's get women and Black owned businesses opened, right? Open for business. Let's work with our partners, our development partners. And then you have other folks like Otis Raleigh at BDC, Chad Williams, as I named, at West North Development. I mean, there's so many folks, Jolanda Stokes at Downtown Partnership, right? There's so many folks doing the day-to-day heavy lifting. And right now there's that collaboration. We're all working together. So I think that's what's different than maybe 30, 40, 50 years ago. So again, I'm optimistic. I think the next 5 years, you're going to see a lot more development happening and a lot more moving that needle forward in Baltimore.
Right. And it's interesting because I was at an event not too long ago where you were on the panel. And what was interesting to me is that I knew everyone that was on the panel, including yourself. And what I noticed was that there were two people on the panel that had been here for a very, very long time. And I feel like everything coming out of their mouth about Baltimore was just like negative, negative. And there was you and someone else there that were like, no, trying to keep it going. Happens to be they had a lot of white hair, so maybe they're just not, they don't have the energy to deal with some of the political issues. But it is interesting to see an increase of a lot of the, what I would say, OG groups that were in Baltimore that are like trying to like not be involved. And we're seeing it in general. Like I said earlier, there's this an emotional reaction to Baltimore. And I don't know if you've experienced it when you're trying to, let's say, fundraise for the next deal from LPs, but there's like an emotional reaction. I had this conversation 2 days ago for a deal that we're doing privately. And this investor said, I talked to my management team and just delinquency is just terrible. I don't know if I want to. And I said, okay, what's your delinquency rate? So I don't know, 10%, right? 20%. So, okay, no problem. Underwrite that in your deal. What number does it make sense now? He's like, oh, I didn't think about that. Okay, go to your manager, ask him to underwrite that. If that's what you're so nervous about, going back to your point about underwriting, like, yes, there's challenges, but where are you getting in market where you're paying 60, 70 a unit and then getting 11, 1200 in rent? Like, where are you getting that? You know what I'm saying? It's like, just sometimes you have to just go back to the basics. Where are you getting that?
Mm-hmm. Yeah. And to your earlier question about the outlook and everything, it can be taxing. People say all the time, you either got to be half crazy to be doing deals out here or really passionate. And I think the latter is true. There's a lot of passionate people that care. This is very challenging and complex work. We deal with, different governments. We're dealing with utility company. We're dealing with community. We're dealing with a tough construction environment. We're dealing with, cap stacks. I mean, it's not easy. Let me be very clear. It's not easy work. But we know it can be done, right? And if you're willing to roll up your sleeves, if you're willing to collaborate, if you're willing to get a little creative, right? Not just debt equity, it's going to take some legwork. It can be done and it can be rewarding. And like I said, we have the opportunity to get this right. If you look at other cities DC, Atlanta, LA, wherever, Houston. I'm not convinced that leadership was very intentional as development was going on. Because last thing we want to do is twofold. One, we never want to push legacy people out, which means you got to keep it affordable to a certain extent. But two, you also want to be mindful of even like businesses. When we talk about gentrification and all that, the issue is when areas improve, let's set aside the residential and the homeowners, but the commercial side, there are businesses that could be like a cafe, right? That's been there maybe 35 years. So they were there when it looked crazy and nobody was excited and they were still blight and vacant. And then you have, almost 40 years pass, and maybe in the last 5 to 7, there's been improvements and, positive things happening. And then maybe the owner of that property is trying to, drastically increase the rent. So then you have this community focused, commercial retail spot that everybody knows, right? Like that's their favorite shop, whatever it is. I'm making it up, a cafe. Now faced with maybe having to move or vacate because they cannot afford the new rent because the area has improved, right? And what does that mean for community to leave something that, meant a lot, where you walk in the place, they know your name, you know their name, you feel safe, you can have community there, whatever. Could be a restaurant, could be a barbershop, could be a cafe. So when I say leadership has the opportunity to get this right in Baltimore, we still have a number of vacants, we still have, blight. And we can show up for people, not just the residents, right? Which is important. The homeowners, the tenants, all of that's important, but also on our business and our commercial side so that as areas improve, people don't get priced out. People don't have to leave.
Right. And 2 points on exactly what you're talking about. Number one is that I think there's a difference between changing in a community and improving a community, right? So I think that you can improve a community and don't have to just try to get a whole new community. I think, one of the biggest factors and one of the biggest proofs of this is the Port Covington development that right now is in the gray zone, right? I think that their idea was to create something new, and it's something I was tracking from 2020 to see how's it going. They were struggling with leasing for commercial spaces, and they really needed a real anchor of business in order to really bring people in. But you saw what happened there eventually, which is they just couldn't get it to go off. They needed the people to come to the city, and it didn't seem like that happened. Versus a development like Westport, right? With Veer, I think the vision is more improving, getting the bus. I think it's the bus line they're trying to get down there into there. Like I think that's a very different mindset. And I think in a city like Baltimore, to your point, improving is really what's going to get it done. Even just getting it past the community boards. If you're trying to like kick everyone out, that's not going to fly.
Thinking it through, being intentional, and improving, I like that, and not changing, and working with community so that, everybody can enjoy the fruits of the labor and, what is yet to come in said community.
So to that point, and this is going to be two loaded questions on the topic, which is that the way investors are looking at Maryland right now, whether it be business or even just the regulations that they're passing, whether it be the energy efficiency or PG County's rent stabilization. In fact, like those are questions where I don't know what to tell investors because I hear that complaint, right? If a city, right, look at Baltimore City, 80% of the stock was built before 1990. And now the Maryland government wants people to have zero emissions by 2035. As an investor, that means, okay, $5 million of CapEx, but I can't raise but I don't have the rents to cover that. To me, as an investor tells me that doesn't make sense, I hear them. Or even PG County's rent stabilization. If you want to tell me you can't raise rents on existing tenants, I get that concept. But now if I have a unit that's renovated and I spend money renovating it, like New York,
there's thousands of units sit empty in New York because of that. And I think the mayor is working on changing that, which is great. Otherwise, you can have a unit, literally, I'm talking about a unit could sit vacant for 20 years, 25 years. Because to your point, the amount of money that landlord or owner has to put into renovating that property, and then if it's rent control, they can only clip a $1,500 rent. Doesn't make sense.
Correct. And to that point, that is something where I struggle to where investors ask me, like, this is a real challenge, like with BEPS and the rent stabilization that's been passed in Montgomery for a while, PG recently. Is Maryland really focused on improving or just looking at a very day-to-day level? Because sure, these things, that sounds great technically speaking if it was feasible.
Right.
And rent stabilization in PG County sounds nice on a day-to-day level. But then when you look out, like what happened in New York, does it make sense? And in that aspect, are they really looking out for the investor?
Again, I think it's up to the investor to do their due diligence. And what I would say, for example, like when we are designing projects, we've been doing all electric. You know, as you've done projects in the city, third-party utility connections can take forever for gas. So we've just stayed away from gas in general. But again, if you're doing new construction, there's time to make the correction or, design real time. For existing stock, again, maybe that investor strategy is not like, oh, how am I going to fix this and invest all this CapEx? But maybe it's offloading. And then an investor or developer, potentially local, could buy it. And maybe that second person knows about some of the grants and programs and all the things I'm talking about. But there is no shortage of incentives or programs out there. Uh, and again, either you know about them or you don't. I mean, again, I will state Maryland DHCD, Department of Housing Community Development. If you just go on their website, there's plethora of information. Baltimore City DHCD, again, they have their own programs too. So I think it is either A, passing the baton and selling the assets and maybe somebody who has, knowledge of other programs that they can leverage to make that deal work, or B, that person continuing to look online to say, okay, if I have to invest this CapEx and my rent is still, X, how can I make this work? Well, the solution is maybe leveraging some existing programs.
Right, like Miha or some. Yeah, I hear that. I definitely hear that. So what's your plans for the future?
Oh man, I'm just excited. I would tell you, uh, it is a privilege that I don't take lightly that we've had the ability to partner with some incredible organizations, both for profit and nonprofit. It is a privilege to stay busy with work. It's a privilege to connect with folks like you and get new opportunities. So I'm just excited. I think, over the next 5 years, hopefully we're doing a lot more, both, on the residential side and showing up and creating homeownership opportunities, but also expanding the portfolio. Again, I am a multifamily kind of mixed use guy. I want to increase, number of doors. So that's a priority. So just continuing the journey and working with good people, getting stuff done. Can't tell you how important it is, looking at a project, modeling the project, raising some capital, but actually getting to certificate of occupancy is key. And if that can be your metric, how many UNOs do you deliver? That can tell me, you're a serious person or not. So I'm just excited to continue moving the ball forward.
What areas are you focused on now?
I'm a Central West. I'm West Side certified. I love the West Side. I got started on the East Side, and shouts out to Councilman Stokes, one of the first elected officials that really took to me and helped me when I was doing stuff. We're in the East, but it's all over 2 and 2 and 5. Yep. 2 and 2 and 3 as well. I was doing houses over there, and then I ended up doing a block. And then Councilman Robert Stokes was just instrumental. One of the people that understood, that got it. And if you had a question or if you needed help, I mean, he was there. So I really appreciate him and his early efforts. Still keep up with him. Saw him the other day. But yeah, I'm just excited.
Right. You're at the supermarket. I don't know. Is that
It's public. Yeah.
okay? I got this.
No, I appreciate
I
it.
had to be gentle.
Oh, it's public. So that's a deal. He's mentioning a deal. Blank Slate is partnering with MCB Real Estate. We acquired a vacant parcel on the corner of Park and North Avenue. We're constructing a 20,000 square foot retail plaza with Streets Market as the anchor grocer. So that is a exciting project too. Like stuff like that. Like I've done the houses, I've done the building, but to partner with a leading developer in Baltimore to deliver, retail and grocery in a neighborhood where people often have to drive out to get stuff. I mean, that's an incredible feeling. So, and even potentially having the opportunity to get some local folks in those spaces, right? So they can have a brick and mortar so that they can, earn money for their families and everything. So that's a real exciting one. That's scheduled to break ground this year and they'd be open around this time next year.
Open next. Whoa, that's fast.
We don't play.
Wow, really on
He's
point.
machine.
Most developments in Baltimore, I feel like change hands every 5 years.
Yeah, we acquired this in Q4 of 2024.
Wow.
And going vertical in 26. So it has a top priority for both of our firms, and everybody who has touched this project, the design teams, the development team, it's been an incredible ride. So I'm excited to get that one going.
And it's next door to the TAFCO MCB. Those are office development, literally right there.
Yeah.
Wow. Before we finish up, because time flies, we're already almost at the end of it. I'd love giving a few minutes or really anything that maybe you wanted to share that we didn't get to. If there's anything that you want to file our marks.
Yeah, I mean, I hope people are encouraged. Again, Baltimore is an incredible city. I think you have to be patient with her. You have to understand her. You have to do your research. But it is an incredible city with incredible people, incredible neighborhoods, and it's not for everybody, right? If you know, you know. But I want to encourage people to come and participate. I want to encourage people to be intentional, and partner. Like, you don't have to do this alone. I do believe in collaboration and working together. I promise you there's enough inventory for everybody. So you don't have to worry about someone stealing your sauce or anything. Like, there's too much work out there that will keep us busy. And really, on an ending note, I really just want to thank everybody. And I don't want to get in trouble because I might forget some folks, but, folks like Inspector Tim Lewis, who was always there to come out to the site and teach me code. Folks like Deputy Commissioner Eric Booker and Wendy Redford. I mean, just incredible people at the city. Mayor Scott. Folks like, Councilman James Torrance and Councilwoman Miss Porter. Folks like Dave Bramble at NBC, Senator Hayes, Chad Williams at Winata. Like, I can go on and on about those that have helped Blank Slate, but also willing to partner with us so that we can achieve and do projects that often people run away from and say, I just can't do it. So I'm just grateful. Even our funders, Univest Bank, Baltimore Community Lending, the nonprofit sector. I talk about Downtown Partnership, Healthy Neighborhoods, Bob Pickett's group. I mean, I literally can go on and on. You guys see Blank Slate, you see the stuff we're doing, but behind that, it's a collective. It's not just us. I'm just elated and grateful that people took the time to partner with us and work with us and move the needle forward for Baltimore. So thank you.
Love it. And I'm very excited to see what your projects bring to fruition, especially the grocery. And I think in general, Baltimore has a grocery desert in some areas. Thank you very much for coming on. Everyone, until next time, if you have any questions, feel free to reach out and I will get you connected.
Awesome. Thank you all.